Thank you for joining us. This is Business Morning. I'm Ladi Williams.
And I'm Chimeze Obi Iwagu. Good morning and thank you for joining us. We're beginning the show with commodities market and starting off on the global oil market space. Oil prices gained for a second day this morning after a bigger than expected drawdown in U.S. crude and gasoline stocks confirmed outlook for robust fuel demand and on doubts about the future of the 2015 Iran nuclear deal that could end U.S. sanctions on Iranian crude exports. Brent crude futures rose 8 cents to $75.27 a barrel after increasing 0.5% on Wednesday. U.S. West Texas Intermediate crude futures climbed 9 cents to $73.70 a barrel after rising 0.3% on Wednesday. Both benchmarks hit their highest since October 2018 on Wednesday, but they paired the gains later in the session as energy traders locked in profit after the U.S. inventory report. Prices resumed climbing in Asia trading on Thursday.
And the U.S. Energy Information Administration said U.S. crude inventories fell by 7.6 million barrels in the week to June 18 to 459.1 million barrels, the lowest since March 2020. U.S. gasoline stocks fell by 2.9 million barrels in the week, against analysts' expectations for an 833,000 barrel rise. The Organization of Petroleum Exporting Countries and its allies, which will meet in July, have been discussing a further unwinding of last year's record output cuts from August, but no decision has been made. Brent has gained more than 45% this year on the back of supply cuts led by the OPEC Plus and recovering demand amid easing COVID-19 restrictions, with some industry executives talking of crude returning to $100 for the first time since 2014.
Meanwhile, here in Nigeria, it's the most challenging times for an average Nigerian consumer with high inflation rate coupled with low purchasing powers. The manufacturers are also not smiling as they are faced with squeezed margins and earnings coupled with structural bottlenecks and policy uncertainty. Who bails the cat? We will be having this conversation with Bismarck Rwani, CEO of Financial Derivatives Company on Commodities Market Update in a moment. Do stay with us. Well, we're being joined by Mr. Bismarck Rwani to look at the issues of inflation here and how consumers are dealing with it, and of course, the manufacturers. Thank you very much, Mr. Rwani, for joining us. Well, Nigerian consumers have been, at the short end of the stick for ages. Some had hoped that the consumer protection perhaps may be the saving grace for the embattled consumers. But then the consumers are struggling to survive high inflation, soaring unemployment rate, and of course, imminent adjustment of electricity tariffs and petrol prices. So what is the hope for the Nigerian consumer, especially with this recent inauguration of the National Steering Committee on Poverty Alleviation?
You put it right. The Nigerian consumer or the Nigerian citizen, in other words, is embattled. There's a bunker mentality. First and foremost, the economy is struggling. Secondly, the future is unclear. So when you have, when you're struggling and the future doesn't look clear, you become desperate. And a desperate man is a dangerous man. So at this point in time, you're saying, slashing the consumer's throat. Truth is that the throat has already been slashed anyway. So it's how to survive in these trying times. Having said that, we went on a minimum wage from 18,000 to 30,000. And in dollar terms, it was supposedly about $90 a month. Now it's back again to about almost $60 a month. So when confronted with higher prices and lower income, the consumer begins to change its habits and patterns. The NBS has disclosed that 58% of Nigerians actually reduced the amount of food they are consuming in the last 3 months. Not switching to substitutes, but actually reducing the quantity of food, not to talk of the quality and the nutrient value. Right? 26% of Nigerians reduced the amount of non-food items they consumed. Therefore, it's a battle for survival. So that's the context. Now, what does this mean? The question is, who protects this consumer is the consumer protected more by regulation or protected more by competition? The answer, well, in a free market economy, consumer is king. But in a free market economy that is rigged, the consumer is a slave, right? So that's the truth. Today, you have, for example, if you want to buy a plot of land from the government, if you want electricity meter, right? The regulations are there that you must get a meter. The regulations are there that you can get a plot of land. But the regulation does not protect the consumer. You will not get that land. You will not get that meter because regulation cannot see you through. The reality is that it is competition. 20, 30 years ago, if you wanted a telephone line, you had to bribe, you had to do that. Today, because of competition amongst the telcos, you can get a SIM card within a second. So the question is, what is protecting the consumer? The reason why this has come up more than anything is that prices have gone up sharply, whilst at the same time, the empirical evidence says that prices are going up, are declining, while anecdotal evidence shows that prices are actually, so there's a catch somewhere. Okay. I think that is the context in which we are.
And also we have manufacturers also not spared in this. Not only consumers are facing challenges, also manufacturers with corporates facing squeezed margins. Tell us about this.
Now, see, the manufacturer can only sell to a consumer who has money to buy. So when confronted with this situation and incomes are dwindling, the manufacturer has a choice, either to pass on the increased cost to the market and sell nothing or sell less, or pass on, absorb some of this things so that at least you remain there while others will not survive. So what you're seeing today is that some manufacturers are cost efficient. For example, let me take Nestle, right? The Milo, Maggie Cube, Golden Morn, and all of that. They've passed some of the cost efficiencies because of on to the consumer. So you find that their prices have not increased as sharply as the rate of inflation. In other words, they are absorbing this, but they are absorbing it with cost efficiencies. While the inefficient players have no choice but to pass it on to the market. And basically, they have to adapt or perish. That's the way it is. So the question remains, what prices are going higher, and by how much are they increasing? And then how much is driven by competition, how much of it is driven by regulation, and who protects the consumer eventually?
Now, okay, talking about the prices that are moving, the price of cement has just increased by 21.2%. We're having it at 4,000 naira per bag at the time when Nigerian consumer is reeling. Now, one of the players is clamoring for a form of price control. This same conglomerate has also increased prices of flour and pasta by over 60%. Now, cement is a building material, while flour and pasta are food items. What is your view on the price control, in general, and the selective approach being suggested by the interested party?
Well, they say all is fair in love and war. Now, this conglomerate, and let it be nameless at this point, is saying that please control the price of cement because it's probably a marginal player, maybe less than 10%, right? Whilst in the flour and pasta space, is a bigger player. So in every industry, you have what they call price leaders and price followers. In any case, in a free market, if you increase your price beyond the indifference point of a consumer, the consumers will move to the others. So first of all, price controls never work. It leads to all sorts of arbitrage and speculative activity. It distorts the allocation of resources. So it is disingenuous for anybody to say, oh, please control the price here, but don't control the price there. Because in business, you have what they call loss leaders. You can decide to take losses in one area while you make profits in the other, but it's the group income that matters. So I would discount that as a it's an irrelevant cry by a player that is losing market share, right? But if the price increase, and let us look at cement, cumulatively, in the last 7 or 8 years, the inflation has gone up by more than 110%, while the price of cement has only gone up this year by 21%, and also cumulatively about almost 50 to 60%. So, in other words, the cement industry has been absorbing some of the cost because there's the cost of putting and the cost of transporting cement from one location to the other, especially at a time when there was a recession, especially cement is seasonal. During the rainy season, nobody buys cement. So who are the main buyers of cement? The civil and construction business, real estate, which has been down, and other areas. So what has happened is that you see more roads being built with interlocking blocks and aggregates. So the cement industry is probably fully integrated, but you cannot subsidize that industry. Neither can you exploit, because it's highly competitive between Dangote Cement, which is a dominant player, and Lafarge, who are the key players. Then you have some others who are trying to kind of gain some relevance.
All right. Well, let's still look at this inflation rate. It's reported to be declining, albeit marginally by 17.93%, but anecdotal evidence points to the contrary. You know, with monthly and core inflation, you know, edging higher. But in your opinion, what do you think is responsible for this mixed movement with prices?
Let me put it this way. You say I have no doubt about the integrity of the NBS in terms of publishing data. But one thing we must note is that at this time last year, in April last year, April and May, there was a complete lockdown. There was no movement between states. The markets were shut down. So any enumerator who goes out to go and ask, who were you asking the questions as to what the prices were when the markets were shut? Who were you asking the questions when you couldn't even move? The enumerators couldn't move. The people that were enumerating or collecting data. So most of the data that was used in April and May last year are suspect. So if you are comparing the price of goods in a basket in May 2021 with May 2020 when there was no market, no movement, so you are comparing, you know, this is an opaque situation and this is a transparent situation. The truth will appear when we started opening up, and don't forget it was Ogun State, Lagos, and Abuja that were shut down, but no movement. The airports were closed. Nothing was coming in. The ports were closed. Now, by June, July, we started opening gradually. Then you begin to see the difference. The base year effect that was being talked about was that market in the second quarter of last year was non-existent. Now, let's move forward. So May, June, July, you're going to be seeing this. The price of petrol last year was basically almost about 125 naira a liter at that time. Now it's 165 naira a liter. If you look at almost all the commodities, between last year and this year, there's been a spike that is definitely in excess of the 17.93%. So I think that it will correct itself. But more importantly is the fact that you have monthly inflation, which is the price of a bag of rice last month versus this month, is showing an increase. That is more relevant. So structurally, the economy is struggling. But when you look at it in terms of money supply, which is growing at over 20%, and you look at the cost of doing business, right, there's no way that prices could be declining. I think that the data will correct itself as things become more efficient.
Some analysts have argued that, you know, opening our borders could actually help in driving down, you know, prices of food. But what do you think about that?
It's interesting that opening the borders, it's a double-edged sword. Yesterday I heard on the radio that our petrol consumption is 103 million liters a day. Peak time, when the economy was growing at 3, 4, 5%, even during the Ojota problem, we're doing 60 million liters of petrol a day. I'm not aware that the roads are full of new cars, new licensed cars and all that. So how come our petrol consumption doubled in this period of contraction of economic activity? So something doesn't add up. So what is happening is that the closure of the border or the reopening of the border has made the border, this is a smuggler's paradise. So basically, you bring the petrol in, you get it at 165, you move it out, and every day, last week I think we had a truck going to Ogun State, and which fell off and along this place. Yeah. One can assume, or one can presume, a better word, that a lot of these trucks are smuggling products across the border because it don't make sense. It's 400 naira a liter across, and you buy it at 165 naira. It's a no-brainer. You make money by going to bed.
Right. You did mention the accuracy of the data that is being churned out. And what do you think are the risks on inaccurate measure of the inflation? How will it impact macroeconomic policies?
Let me say there's incomplete data, there's inaccurate data, and there's all sorts of things. If you do not know how many people are in your house, then in giving money to your wife to go to the market, you are not likely to be correct. So if you were giving her 1,000 naira to go to the market every month, every day, and the children come back on holidays, and you give the same 1,000 naira for, so it is impossible to make any judgment. And I'm using domestic household as a mini example of running a country. So if you are deciding that the number of people here, so data accuracy and data integrity depends on how you use it. So policy making is ineffective or suboptimal if you don't have it correct. So coming back to the point of the fact that what is it? Data integrity, data accuracy, incomplete data, the result is the same thing, that you will make decisions assuming that these are the number of people, or this is what it is, while it is wrong. Therefore, you end up making suboptimal, wrong decisions, which will hurt everybody.
Now, do you think this inflationary, the trajectory we're seeing now is going to continue, or are we likely to still see some kind of reversal?
One of the things that trouble me is that the Food and Agriculture Organization said that food inflation globally is at an 11-year high. Mm-hmm. In the U.S., average inflation in the last 10 years was about 2%. Now it's jumped to 5%. We're saying whether is it structural or is it transient. In the UK, it's gone from 0.7 to about 1.5 to 2%. Mm-hmm. We live in a global village. We have import content. We have exchange rate depreciation. We have cost of doing business. It just makes me wonder how it's possible for the global and regional trend to be in one direction, and our trend is going. Mind you, but Ghana reported 2 consecutive months of declining inflation. Uganda, a couple of countries. It is possible that last year people took advantage of the shortages and pushed up prices, and now it's correcting. And it's possible also that consumers are beginning to resist. Therefore, but just let's take an example and say, let's take the price of rice. Mm-hmm. Let's take the price of gari. Let's take the price of tomato. Each of these things have gone up by more than 60, 70, 80%.
Yeah.
Flour is at 15,500 and it's going to 17,000 on Monday.
All right, we'll continue to watch and see what happens next. Perhaps when they release the next inflation data. Thank you very much, Mr. Rwani, for your time.
Thank you so much.
Thank you.
Okay, we'll take a break, and then when we come back, we'll look at all the market developments. Just stay with us.
Welcome back. Still watching Business Morning. One of Nigeria's non-interest financial institutions, Jaiz Bank Nigeria PLC, has declared a 3-kobo dividend per share to shareholders with a promise of improvement in the years ahead. The bank also released its financial statements for the year ending 2020, which showed that the bank recorded an asset growth of 40%, deposit growth of 38%, liquidity growth of 28%, capital adequacy of 22%, and profit after tax of 19%. Financial statements were given at the bank's annual general meeting that held in Abuja. We take a listen.
Thank you very much. Jaiz Bank is holding its 9th annual general meeting. The meeting is coming on the heels of the economic devastation caused by the COVID-19 pandemic. For the year ending 2020, the bank recorded a total asset of 233.6 billion naira, an equity of 17.9 billion naira, and a profit after tax of 2.9 billion naira, representing a total asset growth of 40%, deposit growth of 38%, and profit after tax of 19%.
The bank statement of financial position and statement of profit or loss and other comprehensive income are in agreement with the books of account. Compliance with Section 27, subsection 2 of the Banks and Other Financial Institutions Act 2020 and Central Bank of Nigeria Circular 2014.
Despite the pandemic, the bank declares 3 kobo dividend per share, and with a new board in place, the management assures the shareholders of a brighter future.
Our profitability for 2020 is 45% more than what we did in 2019. I believe that this is a process that we are experiencing growth, and so the dividend will, once we grow the profitability and we continue to do this year on year, the dividend will also be increased.
A number of steps have been taken to improve on efficiency so that at the end of the year, I think there will be more money for shareholders, God willing.
Shareholders are excited for the growth plans and proud of the bank sticking to its principles.
We thank God for returning into profitability. Last year we did a profit of 2.4 billion. This year we make a profit of 2.9 billion.
With a pandemic and so on like that, for a bank to pay you dividend, I think we are very happy with that. And a bank that have started last year and continue this year, we are hopeful that they will continue paying that dividend in the future.
Jaiz Bank is Nigeria's premier non-interest bank, and the management is planning to increase its customer base by opening more branches and introducing more customer-friendly products.
And Nigeria's economy could be leaning against the wind as the country's external reserves fell to a 13-month low last week. Last Thursday, the figure slid to $33.79 billion as it dropped by $30 million. This is in spite of the continued recovery of global oil prices, which currently trades above $75 a barrel. Akintoye Oyelaku, investment analyst with Cordros Assets Management, will weigh into this, plus other issues making the headlines. Akintoye, thank you for joining us. Good morning.
Yeah, thank you very much. Good morning.
So there's been a sustained downtrend in the external reserve balance of the country. Despite the continued recovery in oil price, this trend has stoked concerns about the ability of the country to support the import of goods. What are your thoughts around external reserves and import sustainability?
Yeah, thank you very much. So, as you have mentioned, we have seen a sharp decline since the beginning of the year. The external reserves has dropped from a peak of around $36 billion to $33 billion. Well, if you notice, earlier in the year, Nigeria repaid around $500 million in terms of external debt. This had an influence on the external reserve. We saw it declining. And also of recent, the CBN has started to increase the FX supply across various FX segments. And this has been what we have seen in the I&E window. The I&E window activity has improved significantly compared to in the past 4 or 5 months. And this led to some sort of gains in the parallel market also. We saw Naira appreciating from 505 to the dollar to around 490 to the dollar. And this is one of the reasons why we are seeing sustained decline in the external reserve, basically the increased FX supply across FX markets. Also, we have seen the central bank informing banks that they can now increase dollar supplies to those that are traveling, maybe for schooling or for health purposes or any similar reasons. So this has also led to Naira appreciating across the FX windows. So basically, if you look at the external reserve at this level and then look at what we expect for the remaining part of the year, given the fact that Nigeria is expected to get around $4 billion in external debt during the second half of 2021, of around $4 billion, this gives a potential upside to the external reserve. So we are likely going to see an accretion in the external reserves. And also when you consider the fact that Nigeria is considering issuing a euro bond also in the second half of 2021, and this will also shore up the current external reserve balance that we are having. And lastly, when you consider the continued recovery in the oil market, we have seen that demand continues to strengthen, and OPEC has, continued to they have started to ease production cuts, which is very positive for Nigeria. So by the time you consider all these factors together, there's still an opportunity for a strong upside for the external reserve. So it is wondering why about how sustainable import is for the rest of the year may not be something to really consider, given the potential for increased external reserve towards the end of the year.
Now, as the global oil market continues to trade with stronger optimism on the back of waning COVID-19 tensions, the Naira is expected to remain stable in anticipation of increased supply by the CBN across the various FX markets. What are your views on the oil market recovery, and what should we expect in terms of Naira stability?
Yes, so for the Naira stability and the oil market generally, given the fact that oil market contributes a major chunk to our external reserves, and what we have seen since the beginning of the year has been sustained upward trend in terms of recovery, and we expect this to continue for the rest of the year. And we believe that with the rate of improved vaccination across the world and the reopening of economies, the demand for fossil fuel, which crude oil also is part of, will drive increased activities in the oil sector, which is also positive for Nigeria. And with the CBN already improving dollar supply at the I&E window, and also recommending that banks can now start to increase dollar access to people and businesses. So this is very positive for Naira stability. So looking at the rest of the year, we might not see any significant depreciation or devaluation in Naira if we continue to see increased supply of FX. However, the major concern is now in the long run, can we maintain Naira at the current levels? Given the fact that we are still very much exposed to the oil sector, oil sector contributes around 85% or 90% to our export revenue. So there's a need for diversification of revenue sources. If not, whenever there's a global shock like COVID-19, we are likely going to see it impacting on the sustainability of Naira's current value.
All right, let's look at other markets. Regardless of the yield moderation in fixed income instruments, the domestic equities market has been, largely bearish. What could be the reason for this bearish performance, and what is your outlook on the equities markets in the near term?
Yes, so this week we have witnessed mostly bearish performance in the equities market. If you recall, in the previous 2 weeks, the equities market has seen a rebound. We saw buying interest in across major stocks, which led to a lot of price appreciation for these stocks. However, for this week, we have seen a lot of investors taking profit on some of the fundamentally sound stocks. Also, we have seen sell-off in major stocks like Airtel and other stocks such as Zenith. So these are the major drivers of the bearish sentiment or bearish performance that we have seen in the equities market so far. However, when you consider that the earnings season, half-year earnings season is around the corner, so by between July and August, we should start to see companies releasing their half-year results. This is likely going to drive sentiment in the equities market. So for those stocks that investors expect dividend payment, we should see some buying interest, especially those that have suffered a lot of sell-offs across the equities market. So we should see some buying interest in the near term.
Okay, so the Debt Management Office yesterday conducted a primary market auction after it reopened the March 2027 and, of course, March 2035 and March 2050 bond instruments. Given the outcome of the auction, how do you think this will shape investor sentiment for the remaining trading days of the month?
Yes, so for the bonds auction that we saw yesterday, it still continues to strengthen our opinion that the yields level in the fixed income space have breached their peak level. And what we saw at yesterday's auction was the stop rates for this bond auctions closed lower. So we saw a lot of buying interest, a lot of bid for these bonds, and we saw that the allotment was greater than the bond offering. So what this is likely going to do to the financial markets is that investors will now try to be locking in on rates for the longer end, given the fact that one of the major metrics that investors look at is inflation numbers. And given the high base that we had in the second half of 2020, inflation moderation is likely going to continue, which means that the central bank may not tighten the monetary policy in terms of raising monetary policy rate. So yields may not go above the current levels that we are seeing. However, with inflation expected to moderate, we might see a lot of buying interest, which will likely drive yields lower from the current level. So what we expect to see is investors taking positions to lock in on yields for longer tenors, unlike what we are seeing at the beginning of the year, where most investors we are taking position in the short end of the curve, given their expectation that yields will sustain an upward trend. So at this current level, we expect to see some buying interest, especially at the longer end of the fixed income yield.
All right. In another development, lately there have been talks around the introduction of a digital currency by the Central Bank of Nigeria, which is in line with the global trends as central banks compete with, the growing adoption of cryptocurrencies. What is your view as regards the importance of a digital currency?
Well, when you consider digital currency with cryptocurrency, they both have their own benefits and disadvantages. One of the major reasons for the emergence of cryptocurrency has been the requirement or the request for a type of currency that is not controlled. That is, investors desire some sort of autonomy, and this has been one of the reasons why we are seeing a lot of buying interest for cryptocurrencies. Also, when you consider the fact that cryptocurrencies allow for easy movement of funds with very low costs, and this has also been a major factor which has supported the demand for cryptocurrencies. But if you look at the negative aspect of cryptocurrency in the sense that the cryptocurrency is very volatile, which means that it is not a good store of value. And this will definitely drive concerns for investors who do not want to lose money. For instance, during the year, we saw Elon Musk making some negative remarks about cryptocurrency, and we saw what happened to the cryptocurrency market. We saw a lot of sell-offs. Again, a lot of central banks are moving against the facilitation of cryptocurrency transactions on banking platforms, and this has been negative for cryptocurrencies. We have seen this especially in countries like China. China has continued to clamp down cryptocurrency transaction, which is very negative for cryptocurrency. However, when you look at digital currency that the central banks are issuing right now, the digital currency are more stable and they are backed by central banks, which means that they are a good sort of value. However, it does not solve the issue of autonomy in terms of the currency that is not being controlled by any central bank, that is free to the market to be able to determine what price it should be. Another negative for the digital currency is the fact that it might affect the rate of deposit with the deposit money bank. If we start to see the creation of digital currency, this may mean that a lot of people may prefer to keep their money in digital currency rather than in the fiat currency. So this is a negative one. However, the outlook for the cryptocurrency within the next 2 to 3 years is that there's going to be a huge sell-off in the cryptocurrency market. However, with the agitation for a sort of currency that has autonomy, the cryptocurrency could still regain buying interest later on. So there's still a future for...
So sorry, we'll have to leave it there. We'll run out of time. Thank you so much for your time on the program. Akintoye Oyinlakun is the investment analyst from Codrus Asset Management. Thank you so much.
All right, thank you.
All right, time for an opening call to the market. Here's Will Ibong. Will, negative sentiment is still persistent in the equities market, no thanks to the tier one banks.
Good morning, Ladi. What can I say? The market has been really choppy and the behemoths are having a go at it. Negative sentiments persist again in the equity market, like you said. So let's check out the numbers and see what they're saying. The all-share index declined 0.11% yesterday, and while the equity cap was down at 19.703 trillion naira, making investors lose about 22 billion naira. Year-to-date loss was higher at 1.7. Month-to-date loss was higher at 1.7%, and the year-to-date loss was also up at 6.1%. The loss in Tuesday's session was driven mostly by the tier one banks, we know mostly Zenith Bank, mainly Zenith Bank and Access Bank. Similarly, when we see the activity chart, we see that there's a decline in the volume, value, and deals. Volume was down 4.5% by down to 208.35 million units, while volume was at 1.60 billion naira and traded in 3,365 deals. Zenith Bank was the most traded stock by volume and value at 33.68 million units and 795.03 million naira. Across the 5 sectors, we see that the banking, the sectoral performance was down. We are able to tell us more about, give us more perspective on what's going on. We have Tajuddin Olayinka, a stockbroker at Valmont Securities Limited. Good morning, Tajuddin.
Good morning.
Good morning, Tajuddin. Please, could you just share your perspective on what's happening? Because there will be no sustained uptick in the equities market. What are the issues that have been causing this downward trend?
Okay. To understand what is going on, I think it is more appropriate to look back into, what happened in the last. Let's look back to what happened in the last 3 weeks, or even last 1 month. You will see that the market went up at the time. It appeared more stable. Then it dropped again, went up, and then it's now dropping. What this suggests, because if you look at what happened today, what happened yesterday, most liquid stocks were abandoning the price in their prices. So what that suggests is that there are some investors with strong sell side opportunities might be taking advantage of the weak buy side power of the market to set the market, on a roller coaster. So what we are seeing is clearly that the market is more on a roller coaster mode, and this is happening because market itself does not have access to cash credit, which is giving this set of investors that opportunity. So once they start selling, once they sell down and they begin to buy back, you see market go down and market come back to the activities. So that is my feeling for the market, because clearly market is largely undervalued. And if you look at even the yield in the fixed income market, it's moderating. So nothing to suggest that the market should be at this level. But when market is behaving this way, it means that some people are taking advantage. That's all.
Okay, Mr. Tajuddin, thank you so much for your input on the broker. That was Mr. Tajuddin Olayinka, a stockbroker at Valmont Securities Limited. Well, Ladi, that's all we have today. That's much we can take today.
All right, so we'll see how the session ends today. Anyway, Will, thank you so much. We'll take a break now. When we come back, we'll do an opening call to London. Do stay with us. This is Business Morning.
Okay, let's cross over to London now and talk to Juliana. Good morning, Juliana. Well, the main events there today are the Bank of England's monthly decision on interest rates and its bond purchase program and minutes of its meeting. Today's monetary policy meeting could be one to watch. What are market watchers saying about what is expected?
Good morning, Chimisa. Yes, it is a big day, and I would say not just the city, the world will be waiting to hear what Andrew Bailey, the Bank of England governor, will have to say about policy rates. The statement will be released at about 12 lunchtime. I think the consensus is that monetary policy will not be changed. Interest rates will remain at the historic low of 0.1%. quantitative easing, which I think is probably the most in focus, is likely to stand at just over £800 billion. Also a big day because Andy Haldane, one of the most outspoken monetary policy committee members and the Bank of England's chief economist, bows out today. It's his last meeting. He has had, I would say, the most hawkish stance of all the MPC members. Last month, he was the only member to vote against keeping quantitative easing at the same rate. So he's definitely going to be sorely missed. But it's really going to be the minutes, I think, Chimezie, that everybody is going to be focusing on. At last month's meeting, the Bank of England changed their outlook for GDP from 5%. They raised it up to 7.5%. Will it be raised any more? Unlikely, but who knows? We already heard from the Fed Reserve Chair Jerome Powell earlier this week in front of Congress that he thinks inflation figures are going to be transitory. Andrew Bailey has pretty much had that same stance. Last month, inflation jumped from 1.5% to 2.1%. Big jump for Britain and over the Bank of England's target of 2%. So yes, there'll be lots of numbers to chew, and hopefully by the time I speak to you guys at BizInc, we'll have all the information and the data then.
Absolutely, and we look forward to that. In the meantime, let's check with the market numbers. How have they opened ahead of the BOE's meeting?
Yeah, pretty quiet start this morning within the square mile. The FTSE All-Share is up, I believe, it opened up by about 4 points higher. The pound currently trading lower against the dollar by 0.05%. Again, as we've already alluded to, all eyes and ears will be glued on the Bank of England to see what they've got to say about monetary policy. Pretty interestingly enough, the biggest rises on the FTSE 100 today are coming from the house building firms. Permison and all of its competitors are trading up. So yes, Monetary Policy Committee right in the centre focus today in London.
All right, thank you very much, Juliana. So we'll wait to get more updates from you later in the day. Okay, let's look at the crypto market. Well, Ladi, what's the latest in your market? Any good news yet?
Well, somewhat. You know, the market was able, BTC was able to bounce from that $28,000 drop back to the $33,000 range. But we've had a pullback this morning. Bitcoin is down about 2%, and a couple of altcoins are actually pulled back to today. But a couple of others, like BNB and ADA and Doge, are still in the green. Look at the market cap, $1.34 trillion. It went down again, down by 1.83%. 24-hour volume dropped this morning, 42.17% down. And Bitcoin dominance is still inching up there at 46.32%. So with Bitcoin dominance still, inching up, it might signal the end of any so-called alt season, because when Bitcoin is going up, altcoins will obviously move in the opposite direction. Price of Bitcoin this morning, $33,004, down 2.76%. 24-hour volume for Bitcoin traded this morning, $36.02 billion. Let's bring in Wilfred Michael now, digital market analyst. Hello, Wilfred. Good morning.
Hello, Ladi. Good morning.
Good morning, Wilfred. Yeah, so yesterday, news about John McAfee actually dying. He was a crypto evangelist and a digital programmer. What's your view on, because he was quite influential, at the last bull run, and now John McAfee is no more?
Yeah, it's really a disheartening story. It's always sad when someone dies, and McAfee was someone that contributed immensely to the growth of crypto, even though his story is not all that rosy, but we know that he was among those that first touted Bitcoin on social media, and he did a lot to contribute to the growth of the industry. He will be sorely missed.
Right. Well, so we've had a pullback this morning and price of Bitcoin and some, other altcoins. After that, impressive bounce from 28,000. What's pushing sentiment this morning?
Yeah, there is a lot of money still sitting on the sideline in stable coins. People are still watching. People are still trying to know which direction the market is going. So I'm not really worried about the current market performance. We have a lot of money sitting in stable coins waiting to be deployed back to the market. So I know that once we have a clear direction, the market will drive to the right way. And that is certainly going up.
But with no clear direction yet, is it possible that a bear market could be lurking?
We are not in any way close to a bear market. Like I mentioned, we have a lot of money in stable coins, over 100 billion sitting in stable coins. And what we just saw is a part of what we get every bull cycle. Those who are making 100x gains within a few hours have exited the market, while those that stay back are studying the market. So once the wipe-off is over, we are going to head back to the right direction. Even if we do get a bear market, I'm sure it won't be as long as what we had between 2017 and 2020.
Yeah, that was quite a long one there. But we still have China cracking down on Bitcoin miners. What impact will this have on the Bitcoin network?
It's only a short-term impact. Actually, in the long term, it's very healthy for the market to have hash power decentralized and not only based in China. When you talk to people that hate Bitcoin, what they tell you is that Bitcoin is from China. But with this crackdown and miners moving to Kazakhstan, to the US, and other geographical locations, it's making the network more decentralized and actually pushing what Satoshi Nakamoto had in mind when he invented Bitcoin.
All right. Wilfred, so great to have you. Thank you so much.
You too, Ladi. Have a nice day.
You too. All right, top holds by market cap, BNB, $291 is in the green, marginally up by 0.48%. Cardano, $1.35, up 5%. And we only have XRP down here at down about 0.67%. The top five gainers, we have Clayton. Clayton doing well this morning, up 44%. And ANKR, 7 cents, up 23%. Quant is up 22%. And we have Bitcoin Gold inching up there, 11%. That's one of the Bitcoin forks there. We have Bitcoin Diamond, Bitcoin Gold, and a couple of them. So it might be a good play to look at other forks of Bitcoin. Top five levers, Aave down 12%, Near Protocol down 11%, Comp is down 10%, and Rune down 9.53%. So, Chimi, it's quite mixed in the market today.
I see. And, of course, the wait-and-see approach is still there in the market with traders waiting for a direction. And talking about John McAfee's death,
yeah, quite sad.
It's really sad. May his soul rest in peace.
Amen.
On that note, we draw the curtain on today's edition of the program. Thank you for watching, and don't forget to join us by 1:30 p.m. on Business Incorporated for more updates and developments in the world of business. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching.